Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been very interesting with a lot of new economic data. And on Friday, yesterday, we got the NFP, non-farm payrolls, which was quite a surprise. So we are going to review the economic data for this week and also review how are the interest rate cut expectations, which really changed dramatically this week, and also perform technical analysis in Nasdaq, in the ES, in the dollar, in yields, in stocks, in bonds, in financials. There's a lot of stuff that I would like to cover. So let's start with the economic data. On Monday, we got the Chicago PMI basically holding at 46, and manufacturing index was in the negative. We were expecting minus 4.5 and we got minus 9. So we just started the week quite a little bit choppy and not continuing last week's momentum. On Tuesday, we got the first big hit. We dropped almost 2.5% on data that is concerning for the economy. On both the manufacturing PMI, excuse me, and ISM manufacturing PMI, we are still below 50. We are at 47, and below 50 means contraction. Also, ISM manufacturing employment is the important part here, means that from 46, we were expecting a little bit of increased strength, but no, 43.9, it's concerns for employment. And JOLTS job openings came in higher than expected. So all these feds that we're talking were saying, okay, maybe we have to cut more, maybe we have to wait, we have to help the labor market, we have to support the financial system. And that was concerning. On Tuesday, we got a big drop to the downside. On Wednesday, with the ADP employment change really pushing 143 when we were expecting 120, was quite of a surprise. Thursday, services was the big data, all above 50. And this means expansion. Services is the sticky part of inflation, but it looks like the market is not worried about inflation. It's worried more about the economy than it is for inflation. So this PMI, services PMI that we were at 51, skyrocketing to 54.9 was really a big news. But still, we both Wednesday and Thursday were inside days, and everyone was watching Friday's NFP and unemployment. And oh boy, did they surprise. The non-farm payrolls came in 254,000. We were expecting a downtick, an unemployment tick also downtick to 4.1. I mean, this is the Goldilocks scenario. Basically, the inflation is progressing lower, but the economy, it's not only holding, it's also expanding. It's creating jobs. It's having almost perfect employment. And that's being acknowledged by the Fed. Average hourly earnings 0.4, better than expected. Average hourly earnings year over year 4% better than expected. So basically, the labor market may be in just the right place, allowing the economy to hum along without inflation ticking back up. That's the result. So what did we do in terms of interest rates? So we are right now here. This is the current rate. And every single day of this week, we were expecting a 50% from here to here, 50% basis points, 50 basis points, 0.5, with almost 75% probability. And right on Friday, we moved that from the 50 to the 25 basis points. So right now we are expecting 25, another 25, and that's all. We are slowly ticking back with 25 basis points at a time. And this is the perfect scenario in which the Fed is slowly cutting rates and the economy is just booming. That's the perfect storm. That's the soft landing that everyone wants. Now, in terms of price action, this is the weekly Nasdaq, weekly NQ. As you can see, we had this, we tried to go lower, but we are holding. We have this more or less bullish doji. But let's zoom in a little bit because we had a weekly imbalance here that we held perfectly. Now for this week, all my focus, all my attention is in this failed inverse fair value gap that we got. So we are basically in this zone in between a bullish fair value gap and a bearish fair value gap on the weekly. This is a high time frame. On the daily, we can see how the Nasdaq hesitated. This was the week. This was the day in which we have 2 inner days. And then on Friday, we almost reversed all of that. I was watching this pivot to really see if the Nasdaq wanted to go higher. Now on the daily, we have also an imbalance. That was the rejection last week. So I think we are in a good spot to really see how we can manage to go through the inverse towards the all-time highs. But we would need a pretty strong catalyst, because right now the only catalyst that is strong is the uncertainty in the Middle East. So we need something to balance that. There's a lot of fear between Israel and Iran. This weekend, Israel is expected to attack Iran again. So there's a lot of stuff that might happen this weekend. And crude oil is spiking. So we need really a strong catalyst to really see if we can go through this zone, which is the intersection between the weekly and the daily inverse imbalances. That's my main concern. As you can see, we managed to hold overall, this is the 1 hour time frame. We managed to hold this quadrant, this consequent encroachment. This was pretty telling. There's a big buyer or buyers that are accumulating down here. And after this big drop, I was watching this 1 hour discount week, and then we pretty much push on the NFP, reversed pretty heavily, and then 1, 2, 3, 4, 5 weeks until a final accumulation. Now, we didn't get this pivot that I was watching. Basically, this pivot is the high of the sell-off. Then we have 2 zones of liquidity, one in regular trading hours and another one in here. So let's focus on the highest one, because this one is going to take also that one. So we have this minor, we have also this minor. I mean, there can be a big push for liquidity, but then don't forget that we are entering a lot of overhead resistance. We have the weekly inverse, we have the daily inverse, the zone in between. We have a 30-minute inverse here with the fair value gap. I think with the buy side liquidity, I think this level, it's pretty interesting. 20,400, it's one of my levels. And then we start climbing the wall of worry. And at finally, this 20,539 is going to be the major liquidity. But let me just put in here that this is minor and this is major. So my concern here is that we try to go for this minor and then we reject lower. But I think we did all the business that we had to do right here. So these lows are pretty much protected. I don't think we are going to hunt this sell side and then drop to take this sell. Let me start again. I don't think we are going to hunt the buy side to take the sell side to then move higher. That would be insane. So the probabilities, what my experience says is that all these liquidity is protected. We already did a lot of business down here. And we push on good NFP showing soft landing. So this pivot is my main target, my first target, and then the minor buy side, and then we will have to see what happens. On the 15-minute, we have a lot of stuff. I didn't trade on Friday, so there's nothing for me to show you. It's just that there were a couple of fair value gaps during the overnight that were taking. We took the highs on Thursday, and then we skyrocketed. We dropped, and then we recovered almost everything. So after digesting the NFP data and the good unemployment rate, I think, let me just remove that and remove what I don't want to see here. There was an SMT also. Just remove this. Let me just clear this a bit to really show you what I'm expecting. I'm expecting this inverse to hold. So this was a very fair value gap on the 15. And there were 1 and 2 order blocks in here. 2 order blocks. We have this on the 5-minute. These are bullish. And we have also this one. And then this bullish fair value gap. So if you notice, what I'm trying to tell you is, if we are bullish enough, we are going to bounce off here or the first order block, and then we are going to hand both buy side from Friday and then attack this pivot. That would be my #1 setup for next week, at least Monday, Tuesday. If this doesn't happen and we take all this liquidity, I will have to reassess my bias because that would be insane. So I'm really expecting price to move higher. I think we did all the business that we had to do down, and we are now prepared with a little bit of help of fundamentals. Any good news, any good catalyst might help to really attack this pivot, this minor sell side at 331. And then we will have to watch price action because we are entering a pretty big zone of resistance. There's a lot of stuff up here, and we really need to see if we are strong enough to just go through, or we are going to grind and chop around here. So this is the Nasdaq, and this is helped by the fact that the entirety of the Magnificent Seven were quite good on Friday. Apple is near the highs. Microsoft is the only one a little bit lagging behind, but it's doing higher lows and higher highs. Tesla 4% on Friday. Amazon 2.50%, really bouncing from here and prepared to maybe reclaim the 197. Google, it's quite lagging behind, but look at this setup. This setup is quite strong. We need to see 170. Nvidia, it's just coiling to the highs. I think Nvidia is going to attack all-time highs at some point next week. And Meta did all-time highs on Friday. Thursday and Friday were 2 big days for Meta. And look at this. Nikki Meta, it's doing new all-time highs at almost 600 a share. This is pretty insane. Look at this. Coiling on the weekly and then breakout. Pretty good for Meta. More things that I like. Breadth is improving. Breadth is, as you can see, the trend is coiling and is now breaking out. The trend is pushing as long as the RSP it's moving this higher. It's now trending higher. It's a lot of choppiness due to the uncertainty with the rates. But I mean, everything, all these, it's looking pretty good. Momentum, we have trend, and we have long term. I'm quite happy with the breadth. I'm quite happy with the Russell, which is also holding in a very difficult environment of rates. Because look at this. The dollar skyrocketed the entire week. The entire week. This is a 2% green week for the dollar. We have to go back to basically, I would say, this day in September 2022 to see something similar. So dollar is showing you, I'm strong. We are going through an inverse daily fair value gap. It was right at parity at 100 and it just skyrocketed. Look at the 2-year yield. The 2-year yield on Friday was 6%. Why? Because the market was pricing in so many interest rate cuts that after the NFP and unemployment showed a lot of strong in the economy, we have just adjusted the expectations on the 2-year yield, which is the shorter term. The longer term, 3.14. Then we adjusted the inverted yield curve because the ratio between the 10 and the 2 was quite heavy. This doesn't mean that the recession is cancelled. We have to see. But the yields on November and December went higher. And this is what we saw previously on the table on the interest rates expectations, that we moved from the 50 basis points to the 25 basis points. Treasuries are freaking out a little bit because maybe we are not going to lower interest rates that much. But the conclusion is that the dollar is super strong. Yields are super strong. And then the final piece is that financials, the sector, it's really coiling towards a big breakout of all-time highs. In an economy in which you have inflation, that inflation it's now controlled, it's progressing downside, and you have your Federal Reserve cutting rates slowly while you see strong financials, strong stocks, strong dollar, strong yields, strong small caps. You don't have to think about recession. You don't have to think about hard landing. Most probably we are going to achieve the soft landing and we are going to avoid recession. So the market is really holding to really see if that's certain. And if that's certain, then we are going to see a big push and we will continue higher on the equities. The only thing that is stopping this market to really push and rip higher is the Middle East and a total war. That would be quite dangerous. And also remember that we have an election in November. So those two things are still on the table. We might see what they can do in terms of negative catalyst. But I think is that we did a lot of business down here. We have nothing to do left. So we are going to basically start continuing higher. We are going to continue higher. Let me just remove and show you my 15-minute one last time. This is, I expect the Nasdaq to bounce from these order blocks or the 15-minute, attack the pivot, and then hold a fair value gap and attack probably these two buy-side liquid. And I don't know the time frame. I don't know when, but I think this is going to be the target. These relative equal highs are quite juicy at 300, and then we have 400s. So that's my number one setup. I will be waiting for that. If we go down again and we start taking this liquidity, that would mean that my entire theory is wrong and I will have to reassess. But I'm expecting the market to do this. And that's all from my side. As always, if you found this weekly recap useful, please give it a like, leave a comment, and also subscribe, support the channel, because I upload videos like this every single Saturday for entire week, summary for you, analyzing and reviewing a lot of stuff for you to be prepared for next week. I also upload from Monday through Friday daily videos for market forecasts, market updates, and market recaps. So you have a lot of things on the channel. If you would like to join me, you are pretty much welcome. But also remember that this industry, it's it's not forgiven. If you do a mistake, it's pretty unforgiving. You have to have discipline. You have to be patient. You have to have risk management. You want to be successful. So enjoy your weekend, do your own analysis, wear your own levels. You have minds for help, but this is just for you to learn and understand my approach. And if you agree with that, well, I'm glad that you enjoy these videos and you learn something. So that's all. Stay safe, everyone. Have a nice weekend and see you on Monday.